In case you haven't heard the news, something major is being proposed. So that's a 50-year mortgage, okay? Traditionally, we look at 30-year mortgage options, but the White House is proposing a 50-year option. And you may be thinking, that's going to help save me money at the end of the day. What does that look like? Well, I'm glad you asked because I'm going to share it with you. So let's take a $400,000 loan on a 30-year term at 6.5%. You're paying just over $2,500 a month for your principal and interest. However, if we do that on a 50-year term, you're about $2,254, which saves you about $273 a month. And you would think that's great. You might be saying, well, Jordan, that's wonderful. Like, that's a good chunk of money to help me save every month. And you would be right. However, let me give you a little bit more information. So let's look at the whole picture. On a 30-year mortgage, in total, you would pay roughly $910,000. The interest portion of that $910,000 would be about $510,000, okay? However, if you look at a 50-year term, $952,000 is going towards interest, which is a difference of $442,000. At the end of the day, if purchasing a home is on your list of things that you want to do in this life, then I am for sure the person to call and help you with that. However, if a 50-year mortgage gets passed, and this is what the numbers look like, which they are because I help people every day, saving $273 a month to then pay an extra $442,000 for the life of the loan is ridiculous. And in my opinion, not the way to fix this housing crisis, but hey, that's just my 2 cents. So if you disagree, please feel free to tell me.